This will look at cost, value, and profit analysis, breaking down the different classifications of cost behavior. And we'll also look at the contribution margin. So what is cost behavior? Well, we're looking at what are fixed cost and what are variable cost. Then there's mixed cost, stepwise cost, curvilinear cost. But we're going to focus just mainly on fixed and variable. And what is this? Fixed costs remain unchanged when levels of production change, but variable costs, those are going to change in proportion to changes in volume of activity. And then there's mixed costs, which have a little fixed, a little variable. Now, while there are many different classifications, at this point for CVP analysis, you need to just focus on the two, fixed plus variable, and think of that as your total cost. So we're going to compare an absorption method income statement and a contribution method. Now, many of you may have never heard of the term absorption. That's just another word for the GAAP method, the multi-step income statement. It's known as the absorption method. It is required by GAAP for financial statements. The contribution method is different. We look at different things. That's what managerial accountants use. So we have full absorption costing. What is it? It's all product costs that are absorbed in inventory and then expensed in cost of goods sold at the point of the sale. And the focus is on identifying product and period cost. Variable costing is different because we're not looking at product and period. We're looking at fixed and variable. It gives us different results. Fixed factory overhead, that is treated as a period cost with a contribution method. So looking at the two side by side, you'll actually end up with the same net income. Absorption method, the GAAP method, the multi-step income statement method, that breaks down product and period cost. So some of those product costs can be fixed and some are variable, as with the period cost. So looking at a contribution method, it's just like shuffling the deck. We're mixing things up, categorizing our costs differently. The focus now is on fixed and variable, but the variable can be a product or a period cost, as can the fixed cost. So the contribution method, sales minus variable cost, is contribution margin minus fixed cost. That's net income. And the differences between absorption and variable costing are the treatment of fixed factory overhead and variable selling and G&A expenses. And why? Well, let's review manufacturing costs. What goes in it? The three things: direct materials, direct labor, and factory overhead. But what is it, fixed or variable? Well, direct materials, that's always considered a variable cost, as is the direct labor. Always. But factory overhead is going to be both fixed and variable cost. So the fixed factory overhead is moved below the contribution margin. Variable selling and G&A costs are moved above the contribution margin. So it's the key difference is the absorption method focuses on defining product and period, but managerial accountants have more use for what is fixed and what is variable. So contribution margin is used for various CVP analysis tools, and we're going to review a few of these. So how do you calculate this? Well, that will be on a separate video that details how to actually calculate break-even and target sales.